Innovative mitigation instruments that tackle risks never covered before. The expected results? Large private investments in solar and battery mini-grids, bringing electricity to areas left in the dark for far too long. SRMI's expected impact is adding up. 4 gigawatts of renewable energy enabled, $4 billion allocated to public infrastructure and guarantees, private capital totaling $5.5 billion leveraged, with another $1.2 billion of climate finance mobilized, thanks to the Green Climate Fund and Clean Technology Fund. With each project SRMI supports, another innovative solution is created. The impact grows, and we get another step closer to net zero.
Good morning, how are you? My name is Gabriela Elizondo. I'm the practice manager of the Energy Sector Management Assistance Program. I am very happy to welcome you today to this session on SRMI, Sustainable Risk Mitigation Initiative, how to unlock finance for the development of sustainable renewables. I am very happy to welcome you here for this interesting discussion. We are going to start today with opening remarks, and then we're going to have a panel of very interesting professionals, distinguished colleagues, to discuss the topic. So I would like to offer the floor to His Excellency Stéphane Crusat, the Ambassador for Climate Change Negotiations, Renewable Energies, and Risk Mitigation or Prevention in France. His Excellency Mr. Crusat is in charge of negotiations on climate change mitigation and adaptation since 2020. So welcome.
Great, thank you very much. It's great to be here to talk about a very important initiative. SRMI is really crucial for unlocking private finance. We have a lot of public money around, but we need a much, much more private finance. And so I'm really pleased that back in COP24 we joined forces. There was AFD, there was IRENA, there was SE4All to launch this program to support governments harness their domestic resources in a sustainable and bankable manner. Just maybe a few words about what we in France do that can be linked to SRMI. As you know, the French Development Agency has committed up to 1.5 billion euros to concrete projects in developing countries over the world, including 1 billion with the International Solar Alliance, of which we're a founding member, along with India. And that does not include all the funding also provided by AFD for enabling infrastructures necessary for solar uptakes, electricity networks, interconnection, and energy storage. And I want to give you a concrete example of what can be done in line with SRMI. The AFD, Agence Française de Développement, has developed what is called the Public Payment Guarantee, PPG. It's a de-risking mechanism covering payment defaults by public entities. It can be governments, can be local authorities, state-owned companies, in the context of a long-term contract. And AFD is currently working on the implementation of its first public guarantee payment guarantee to support the Dondo solar project in the frame of the Polaire program in Mozambique. And so Polaire supports Mozambique's national electricity company in setting up calls for tenders for renewable energy power projects, for private power producing companies that bid. AFD proposes its public payment guarantee to partially cover the risk of non-payment by the off-taker, EDM. So here we have a very good example of what AFD does to offer guarantees, to mobilize private investments towards renewable energy projects by mitigating the risks perceived by these investors and therefore support the SRMI's objective. So this is an absolutely essential project. It's been around for the last 3 years now, 4 years, And I think it has a lot of further potential, because it's a fantastic way of unlocking both public and private funding for renewable energies. So congratulations on this endeavor.
Thank you, Your Excellency. These were great opening remarks. Thank you very much. And before we continue with our panel, let me provide a few introductory remarks to set the stage. Just thank His Excellency for joining us. Thank you very much. So, as we all know in this room, renewable energy is projected to account for the majority of capacity additions in the coming decades. In the recent World Energy Outlook published last month by the IEA, renewables account for more than half of new investment in all regions across scenarios, leading to more than 4 terawatts of wind and solar deployment between today and 2030. And in the announced pledges scenario for more than 6.5 terawatts in the coming years. Now, achieving these ambitious targets, especially the net zero scenario, will be critical for the future of the planet. In this context of the current global energy crisis, accelerating the clean energy transition has become more critical than ever, since domestic renewable energy deployment can buffer economies from the volatile cost of fossil fuel imports, curb energy costs, and enhance economic resilience. 4 years ago, as His Excellency mentioned, at COP24, the World Bank, under SMAP, the French Development Agency, the International Renewable Energy Agency, and the International Solar Alliance came together to launch the Sustainable Risk Mitigation Initiative, to help developing economies basically unleash the full potential of the renewable energy endowments by reducing barriers to private sector investment. SRMI today supports 50 countries across the entire spectrum of renewable energy development, including technical assistance to create an enabling environment for deployment of private-owned renewable energy projects with innovative risk mitigation products, variable renewable energy integration with publicly owned grid infrastructure, and sustainable generation planning. SRMI has already made a tremendous impact on the renewable energy ecosystem in the developing world, enabling already 4 gigawatts of new renewable energy deployment in about 20 countries so far, and with presence in, as I said before, more countries. The initiative is now leveraging over $5.5 billion in private capital, securing $4 billion in public infrastructure and guarantees, and mobilizing $1.2 billion in climate finance. In its 3 first years of implementation, SRMI built already a very robust pipeline and portfolio of projects and deployed a wide range of innovative risk mitigation solutions. Today, we are here to discuss the barriers to renewable energy deployment in developing economies, the nature of risk mitigation gaps, and the perspectives of the public and private sector, as well as the perspective of development agencies. So with this, I am pleased to invite a wonderful panel we have today. Let me first introduce you to our panel. We have today Mr. James Manupe, the Presidential Economic Advisor of the Government of the Republic of Namibia. Welcome, James. We have Ms. Alexandra Somstay, the Vice President of External Relations in Akuo Energy, a large French independent power producer. And we have Mr. Stephen Hunt, Senior Energy Innovation Advisor at the Research and Evidence Directorate of FCDA UK. Welcome, everyone, and thank you very much for joining us today. And I don't know if our colleague from the Maldives arrived? No, okay, so thank you and welcome to this panel. So I'd like to pose the first question to Deputy Minister, to you, James Manupe. James, Namibia has abundant untapped renewable energy resources. What are the key challenges you are facing to mobilize private capital to support the fast deployment we've seen in your country over the last few years in solar and wind?
Thanks very much for having me, Gabriela, and of course for IDFC for hosting the event. Namibia does indeed have an amazing renewable energy resource. I mean, we have areas in Namibia that can generate more than 30% capacity utilization of solar. Our offshore wind potential is pegged at more than 700 gigawatts. So certainly a country with a very, very large scale opportunity. As we were trying to deploy more and more renewables into the grid, and of course, I mean, it's very useful to perhaps just paint the backdrop. Namibia imports 60 to 70% of its electricity from the Southern African power pool. And one of our biggest suppliers is actually Eskom, which is itself quite an energy distressed entity, and of course South Africa as well. And so, you know, energy security is a very, very big issue for us. You know, we've been looking to tap into that renewable energy resource more and more. The challenges are the typical ones, right? So grid stability is one. I must actually say that at the moment, our power utility is actually looking to deploy one of the largest storage facilities in sub-Saharan Africa, actually 58 megawatt hours. I know SMAP is helping a lot with that as well. And our NIRP has come out, and it actually aspires to have over just about 80% of renewable energy generation by 2040, with about 650 megawatt hours just from storage as well. So as we look to deploy all of that renewable energy, grid stability is an issue. And of course, financing is a big issue as well, right? Because you do have to look at the off-taker, and typically, of course, the off-taker is the power utility. And then you have to be very careful about, for example, the mismatch between dollar-based assets that are going to be producing Namibian dollar-based electrons, right? And so there's a potential currency mismatch there as well. But be that as it may, one of the things that we're now looking to do as well is to deploy very large-scale green hydrogen assets. And why that makes very large-scale deployment of renewables possible is the off-takers are actually willing to pay quite an interesting price for the molecules. And so as you're deploying, I mean, the first project we're building is just over 6 gigawatts. And it'll be generating between 18 to 21 terawatt hours. Namibia's total consumption is 4.5 terawatt hours. And so there is actually quite a bit of curtailed power that we will be looking to take from the combined hydrogen plant, and then take that over into our power utility, reducing our imports etc. Now, one of the things you will have to invest in to do that are strong transmission grids as well. And so a strong integrated study to actually look at all of those ambitions, energy independence, and at the same time deploying very large-scale renewables to produce molecules, are all part of the challenges that we'll face. But we think it's a fantastic opportunity, and we see it as an ideal situation where we're going to be deploying significant FDI into the Namibian economy beyond typically what we'd be able to do with such a small, you know, local installed capacity of just 650 megawatts. Amazing opportunity. Key thing there is partnerships. And I think, again, the SRMI and ASMAP, and of course FCDO as well, that really helped, has made a huge difference in terms of our planning. And our NIRP is actually coming out at the end of this year, and I think it'll be displaying in a lot more detail our ambitions. And of course, we then look forward to working with you all to really get those ambitions going.
Thank you, James, for sharing that experience. And it seems that renewables nowadays is becoming not only let's say, an energy security measure for many countries. And as I said before, especially now that the energy prices are so high, and that, you know, the availability and let's say the availability of fossil fuels and the pricing of fossil fuels is becoming very volatile, right? So renewables really seem to be a hedge against fuel price volatility on one hand. So we can actually talk about renewables and energy security nowadays, no? So it's very interesting. Also very interesting to know that in Namibia you have a comprehensive strategy that's looking into not only renewables for generation, but also renewables for green molecules. That brings the game of renewable energy really to a complete different scale and level, no? And in terms of the multiple values it can provide to an economy. So congratulations for that, James. I think what's happening in Namibia is extremely exciting. So let me turn now to Alexandra. Alexandra, Akuo Energy has a strong presence in the African continent. as an independent power producer operating in Africa, sub-Saharan Africa, what are the key risks you evaluate when considering new investments in the region? And perhaps you can give us a few examples of the projects in which you are participating.
Thanks a lot. So ACWO is an IPP based in France, but we operate in 30 countries around the world. Sorry. And one of our most important assets in Africa is the ones that we built in Mali. It's a 50 megawatt solar farm that we built during a rough political time. So we have kind of an experience in working in unstable countries with kind of changing political environment. And so to get back to your question, we are actually assessing 5 different kinds of risk that we have to tackle during our development and construction phase. First, the currency risk, then the grid risk, the utility bankability risk, the termination risk, and the political risk. So these are the 5 risks that we are assessing when developing our project. And for each of them, we try to mitigate depending on the local circumstances. And of course, there are different schemes that we can use for each of them. So you ask for example, so I will now go into it. For instance, if you go to the currency risk, of course, any off-taker would like to pay in its own money, but then it raises the currency risk. And there you have different options. First, you can go for currency swap, which is an option, but which is kind of expensive and usually it doesn't cover it all. Then you can possibly go for revenue USD pegging, but then you push the risk to the final off-taker. So this implies that you enter into a negotiation with the final off-taker, depending on whether he wants to take this risk or not. It takes some time, makes the development phase longer. And then possibly, and this is an interesting example that comes from Europe, some countries are actually asking to IPPs like us to actually invest in local money in their own country. And you don't have to go to Africa to raise such an example. You just have to go to Norway, because Norway gives you 90% less taxes provided you invest in Norway. So this is a perfect impulsion for IPPs to actually reinvest the money in the country where they developed the project. So it's interesting to see that Nordic European countries are actually providing examples that could be used in Africa. If we go to the grid risk, as you mentioned, this is a risk that exists in most of African countries. You actually need to go for grid studies in depth, which are most of the time extremely expensive. But the good news is that you have several national and national instruments, such as the one in the UK, or the one provided by the US, DFC, or even AFD, that can cover for these studies. So this is extremely important to make sure that you have the right studies so that you can properly assess the grid stability. And then, of course, as you mentioned, you have to install battery energy system storage, because then you provide the stability that you need to your own system. So, but all in all, this pushed the development phase longer, and especially if you are a small IPP like we are, because we're not a big one, the development phase will take longer. You will go step by step, and then you will try to push the cash that you invest in the project to the latest phases, because you cannot take the 5 risks, as I mentioned, all in one. So you have to cope with one after the other. Let me go, I will not go to each of them, but if we go to the termination risk, right? This termination risk exists in countries where public utilities is a sole off-taker, and the termination would lead to actually no access to the market, which is kind of an issue if you've been investing in the development phase for more than 1 or 2 years. So the solution for that is that the PPA that you actually design with the off-taker define and limit the termination event and actually should provide for a fair termination payment so that you cover the debt and equity payments. So these are the kind of instruments that we're looking into and that we try to develop. The good news is that in most of the countries in Africa, renewable energy development is not as large as in the EU, in the US. So basically it's super interesting to work with local authorities that are very much in the listening and learning mode, so you can work together and co-build the framework, especially with the support of international organizations. So it's not all set in stone. So there is this co-construction attitude, I would say, much more than in European countries, so to say.
Thank you, Alexandra, for offering this good description of the types of risks that IPPs are facing when they enter markets in Africa, and particularly in countries where you see that are more fragile, and you mentioned. And indeed, I think that to mitigate risk, you really need a good co-creation, co-partnering with, especially the government. Because when it comes to the enabling environment, the policy, the regulation, when it comes to critical infrastructure like transmission or even the existence of solar parks or industrial parks that allow you to go faster, etc., it really is a partnership. You need to almost calibrate as you go. And I can imagine that it really takes a long time for an IPP to assess the situation, and of course it's quite expensive because you have to assess and go through the analysis of every aspect of it, right? So, but at the end of the day, indeed, I think this is what we call IPP and power purchase agreements, PPPs, public-private partnerships, because at the end of the day, you have to share risk. And how do you balance that risk? Who absorbs what types of risk? I think is the art of it, and it really is something that we need to customize. So thank you, Alexandra, for offering this good description of the risk that you are facing. Let me turn now to you, Stephen. The deployment of large scale solar battery storage mini grids is a critical solution for achieving universal access of energy. Particularly in sub-Saharan Africa, as we know. I know that the UK, in parallel to many other organizations, and certainly in parallel to the World Bank, has been supporting PPPs, public-private partnerships, in mini-grid programs, and interesting business models, particularly in the DRC, the Democratic Republic of Congo. So can you tell us a little bit about this program? What measures have been introduced to reduce risk and attract private sector participation? What kind, again, of business models, PPPs, have been successful there? And of course, what kind of instruments or risk mitigation products you think are appropriate for that kind of context?
Thanks, Gabriela. Yeah, so we were looking into the sort of the situation in the DRC and what we could do to support there. Obviously, I think it's one of the top countries for energy access deficit. I think second only after Nigeria in terms of number of people not connected to the grid or to power. And green mini grids really came forward as a solution to that. Estimated, I think 40 to 50% of those not served by the grid in Africa are at least served with mini grids. But the question is, how do you bring these solutions forward? How do you bring the projects to reality when you have really all the same risks as an IPP plus more risks? Because essentially you're also operating a mini grid there. You're also operating a grid. You're not just selling the power. And I'll come to some of the risk differences in a minute. But what we ended up doing in partnership with the government was develop an auction approach. And I think it'll be interesting actually to get Alexandra's perspective on the rise of auctions in the mini grid space, but or in the renewable space. But my sort of view is that in itself it's a way of mitigating risk. Setting up an auction, setting up a playing field essentially with the government fully bought into what that will look like, and then creating a degree of kind of market competition around about what the best way of doing those projects are, then gives you sort of confidence that you're not overpaying as a public sector, and it also gives the private sector confidence that this is a real project and that the government will really follow through, and I think in a way that I think sole source deals have always struggled with. This is what we did. We worked very closely together with some excellent technical advisors to frame up what this would look like, and we ended up putting an auction together for 3 large cities, essentially, in the north part of the DRC, as a kind of a pilot for that. And there was a lot of private sector interest. That wasn't a given. That was a risk as well. Can you really do these kind of projects in the DRC? Is anybody going to invest? And it is a question of risk, simply a question of how do you bring the risks down to the point that then the private sector can take part. And we got good participation, and there's now a project, essentially it's been agreed, Gridworks with being the lead on that project, and that's about $100 million project for those 3 mini grids, 100,000 connections and 100,000 people, 23,000 connections. So quite a substantial project, and very much the first of its kind. And I think while it addressed and worked through many of the risks, it also exposed others, which that MOI project wasn't able to address. And one of the most important, I think, was the demand risk. So with an IPP project, you typically deal with demand risk by having a take or pay arrangement. If we generate it, you buy it. And then the residual risk is, will they pay for that? And this is where some of these risk mitigation instruments come in. But obviously with a mini grid, you're dealing with customers, you're dealing with individuals. And the more substantial risk becomes, how much will they consume, how quickly? Often the payment records are good. The question is just how much are they using, and that's a big uncertainty. So it's not necessarily clear that you will get the money back for everything you generate. So, and this is where SRMI has come in. So it's been great to see I think people having recognised that this is possible in DRC from the SRMI project. Now, World Bank has come in with a large program in the DRC, and scaling mini grids have developed essentially a kind of an evolution integrating this demand risk instrument. So again, hopefully we'll see, as you sort of bear down on these risks, and as you repeat the auctions, so you're seeing, the participation again and building up that confidence, we should also start to see costs coming down and getting a bit closer to those international averages, which is where we kind of need to be for scale up.
Thank you, Steve, for offering these reflections. And indeed, I think the context and the investments in mini grids and investment in infrastructure for energy access to reach out to rural communities or to the consumers that are less able to afford electricity, in a way poses a complete different set of challenges. And I think you mentioned, for example, the demand risk, right? And this normally consumers in the peri-urban or rural areas have very low consumption levels. And what we do at the bank, and certainly in mini grids, but also in off-grid solar, is to basically promote productive uses of energy. And we are actively trying to support enterprises and all sorts of activities, agricultural activities, to be able to increase that demand, because without that, then it's very difficult to have a cost-effective mini grid, for example. And also, of course, closing the affordability gap is very important. I think in SRMI, we're very focused on making sure that the projects are viable by closing that gap. And it all boils down to the regulation, right? And to the pricing regulation. How can we also target subsidies to the poor in a way that is effective? But indeed, there is various different risks, and I'm very happy to hear that we are piloting an auction process to lower the risk with time. I think bringing competition to these markets is probably extremely challenging. But this is one of the things that if it works and we see consistent progress, it's something that can be definitely replicated. So no, thank you for offering this example, Stephen, which is very different from large-scale renewables, even in the context of small countries or islands, but this is a complete different ballgame. James, let me return to you to continue discussing the case of Namibia. So you are talking about renewables big time. Namibia is planning to scale up renewables, and you mentioned how many gigawatts of renewables in the next few years? Okay, so you'll tell us, but this is substantial compared to the size of the system. And you are planning to do this with hydrogen, right? So the question I have for you as a follow-up is, how are you planning to sequence the introduction of this infrastructure. What is the total investment that you are expecting to attract? Because I can imagine this, at least green hydrogen in the billion, at least $1 billion to make it happen. And what is the timeline of this?
Fantastic. It's so fascinating to listen to the two conversations. It feels like Namibia is going to go through those motions with this one project like tenfold. I just looked at the figures now of our NIRP. So before the green hydrogen ambition, we were looking to be deploying just over 2 gigawatts, right? At the moment, our installed capacity is 650, as I mentioned. So that's, about 3 times, right? And again, we were looking to reduce our inputs in the process. With the green hydrogen project, I'll give you a few statistics. So, like we mentioned, 6.7 gigawatts is the one project. 21 terawatt hours is the amount of electricity that it could produce. 300,000 tons of green hydrogen or 2.1 million tons of ammonia is a targeted production. The whole of life capex is $13.8 billion. US dollars. Namibia's GDP is about just under $12 billion. The area that we're looking to develop this project has the potential to house 5 to 7 of these projects, to be honest, potentially more. We have now just released our green hydrogen strategy last week, Tuesday, and we've actually developed 3 hydrogen valleys, one in the north, in the Kunene, another one in the western part of the country in Walvis Bay, and then this one in the southern part of Namibia. But let's just focus on this project. So how is Namibia going to deploy $13 billion, right? You can't do that on your own balance sheet. Given this context, is all of the energy going to the production of molecules for export? No. Actually, a lot of that curtailed energy, like we said, we would like to use to get our own grid to become actually potentially 100% green. And if you build 2 or 3 or more of these projects, we are actually intending to become net exporters of green electrons versus net importers of electrons in general. So if you think about the country, it totally turns the country upside down, right? From an energy security perspective, from a current account balance perspective, but even from, we were just talking about hedging some of the risks, right? So this will be a dollar-based asset that produced a dollar-based product. So there is actually no currency mismatch because we're not selling electrons and the government is not an off-taker. German industry is an off-taker. So you're beginning to look at now different risks. So now it's pricing. So how do you price green ammonia? Because actually that's a product we're going to be trading. There is no price for green ammonia, right? And so what risk mitigation tools could you start deploying? The German government, for example, has the H2 Global program, which offers a double-sided contracts for different auction. And for Namibia in particular, we have an MOU with the German government, and they might look to actually deploy a bespoke package that looks to guarantee a certain amount of volume offtake and a certain potential flow price, right? So all of a sudden, you're beginning to sort out your offtake risk. At the same time, in terms of partnership, the Namibian government did more than, we actually did an auction already. So to get this project going, we put out a global RFP, got offers from 6 different developers, 9 different offers, and we chose the best, which was great for market confidence, and we're looking to do more auctions going forward. But we are actually looking to become owners of this project. So the Namibian government is going to buy a 24% equity stake in a $13 billion project. So right, that comes with an interesting question mark of its own. Where are we going to get the money to do that? And this is where economic diplomacy has played a huge role for us. So we realized that this project wasn't just important for us, it was important for our customers, the whole of Europe, and their own green transition objectives. And so not only is the German government looking to provide a certain amount of support for the offtake, the Dutch government, for example, provided a $40 million grant to seed a blended financing infrastructure fund that we are going to be building with the Dutch. That in itself provides a huge amount of risk mitigation in terms of the cost of capital. Because if the Namibian government went to raise this money on its own, people would say, geez, have you actually deployed this amount of blended financing successfully into projects before? But because we're partnering with an asset manager called Climate Fund Managers, they've deployed $1.7 billion across emerging markets into various renewable energy projects. And so that brings a certain amount of confidence. And so the way we're looking to respond to the opportunity of tapping into this massive renewable energy potential is to realize that Namibia is actually a tiny country, right? So Congo has a whole bunch of people who don't have electricity. We're 2.5 million people. Energy penetration in the country is just over 50%, 70% in developed, less than 40 in rural, but that's not the business case. The business case is 300 million people in SADC and a few more in Europe, yeah? And you're decarbonizing their hard-to-abate sectors, but you're actually looking to provide energy security for SADC. And once you start looking at that addressable market versus 2.5 million Namibian people, you really begin to make the most of Namibia's renewable energy potential. And that's an exciting journey that we're very much looking forward to working with you. I do know Gabriela is working very hard in the background to help deploy some grant funding to actually put together a very credible strategy. So we launched our strategy now that was funded by the Germans, but now we're actually going to implement that strategy and start doing grid studies, because we're going to have to really strengthen the grid into the SAPP to will the power there. We're going to have to do another, a new 30-40 kilometer line from the combined hydrogen project into NamPower. And so there's a lot of work to be doing, and as you mentioned, the grid studies are expensive. And so that's a very easy way SRMI can be a part of the journey, but there are many others. The battery for this combined hydrogen project is like 700 megawatts. So 2.8 gigawatt hours is what they're looking to deploy. And again, we will need to work with you on that as well in terms of the appropriate calibration of that, and then to reduce the intermittency and increase the dispatchability of the curtailed power from the combined hydrogen project into the grid. So a lot of conversations to have for sure.
Thank you, James. And indeed, it's a very complex strategy that you have in Namibia, but I think very promising, very exciting. A lot of what happens there and in other emerging markets will actually demonstrate how to do business, right? I think these first interventions or activities where we are delivering green hydrogen or pretending to deliver green hydrogen will really demonstrate the feasibility of that. And I can imagine how complex the contractual issues will be, how complex the assessments, the technical, economic assessments will be. I can imagine how focused you are on the spillover, the socioeconomic benefits of these kind of interventions, because as you said, it's a large, compared to the GDP, it is a large undertaking. So I imagine you are expecting to have a very important economic impact with this new infrastructure. So we still have a few minutes before we turn to our colleagues that will provide closing remarks. But Alexandra, let me return to you and ask you, what do you think is the role of development banks in supporting IPPs, in supporting the strengthening of the business environment for IPPs to be present in countries? And what are the key elements of the risk mitigation that you think can be supported by facilities like SRMI?
Thanks a lot. For an IPP like us, I mean, not like the big ones, I think the role of development banks, and especially this instrument, goes to grid studies, because definitely it's something that we need to actually invest massively in a or the other country. And these studies are so expensive, so lengthy, so technical that we cannot run them by ourselves. It's too much of a risk. That's one. Second, help us going to areas where other IPPs or large developers do not go. In your video, you mentioned the case of Maldives, and it was interesting to see that the technology you mentioned was roof PV and solar floating. But in the meantime, your video says that there was a constraint and a competition on land. And you know where I'm going. I mean, you have to support us going to agrivoltaism, because it's more expensive, it's more difficult, but it's so important to actually bring together farmers and energy producers so that we do not compete on the land and we provide for food to the people who are actually living in this country, and not only green electrons. So for this kind of countries, it's important that you, as Development Bank, you go through a paradigm shift and you accompany us to go in areas which are more difficult, that are at the nexus of different sectors, that needs to have different kind of stakeholders, not only energy utilities. And last but not least, and since you invite me, let me be frank, make sure that your instrument do not require an awful lot of Washington lawyers, because honestly, it offsets the benefit of any project. And if you want to be a genuinely interesting instrument for IPPs, you have to be in such a way that we can actually access to it easily, and you can not only help the country, but help us helping the country and invest fast and smoothly. Thank you.
Thank you, Alexandra, and thank you for this recommendation. Indeed, I think in this kind of projects we need to be pragmatic, and so point well taken. So thank you very much. This was an interesting conversation, if a little fast, and there is a lot we can discuss about risk mitigation in settings like the setting that Stephen described in the DRC, or in countries like Namibia, or in a smaller context where IPPs are present, smaller IPPs are present. So thank you very much. We are going to now have a couple of colleagues provide closing remarks. And we have today Joshua Wycliffe, Chief of Operations for the International Solar Alliance, with us to provide closing remarks. He's not present. Okay, thank you very much. But we have Chris Evans, Deputy Director, Energy Transition and Finance for International Affairs in Environment and Climate Change Canada. So Chris, please, over to you for closing remarks. Thank you so much.
Thanks very much, Gabriela. Is it all right if I stand? Is that okay? Okay, great. Maybe I'll just let's put this down here. So thanks very much. I'm really pleased to be here today. Really appreciate the invitation, and it was great to hear such a substantive discussion from different people. I think as someone who is not at the ground level, it's fascinating to hear about the different types of risk that you deal with, and the specific ways you can make interventions to address key points of blockage to unlock big change. So I think that's what we're very proud and interested to be working with SRMI with. And I'll take things in a little bit of a different direction, because I think we talked a lot about the growth that we need to see in renewables and how to enable that. For Canada, in terms of our own international climate action, we're focused on that, but as much on what that enables in terms of phasing down things that need to go away, we need to move away from. So for us, it's really essential to unlock the, do I have to put this like closer or further away? Closer is better? Okay. Yeah, so for us, it's really about the twin imperative of addressing climate change while we're meeting energy access and economic development goals. And for that, we really have put the central thing, the most important thing that we can do is to phase down coal and grow the clean energy. And that's the way that we'll unlock those twin imperatives. And so one of the things that Canada is involved in, we're very proud to co-lead with the UK, the Powering Past Coal Alliance. It's an international voluntary initiative. We have over 170 members now, governments and industry, and we're driving the momentum to phase out coal-fired power plants and to scale up clean energy. We will be celebrating today 5 years of the Alliance. So we're a little older than SRMI, and we'll be launching the PPCA's first report today, substantive report on the stories, the progress that's being made on solutions like these, and how that's enabling ambition on coal power. And what that shows us is that it's possible. There are ways to do this, but it's not enough. It's not enough because the barriers, the key barriers, are not just technical and economic. They come down to these more, not intangible, but buried barriers around risk and also social change. And those are often the things that block up the solutions. And so it's really important to be addressing those barriers, and that's how we aim to use our climate finance. So we put energy transition as a cornerstone of our $5.3 billion in climate finance. We're proud to be working with SRMI through our $275 million clean energy facility with the World Bank, through projects in upcoming projects in Vietnam, the REACH program. So we're very interested in using that to drive the energy transition. So I think what I would say is that this shows, like the conversation today shows how we can scale that impact, but again, by addressing those key barriers. And for us, to bring it full circle, we feel like we've been rolling the dice too long with coal power generation in the world. And I think we can all agree here that the one risk that we can't risk to take is the risk of a 2-degree world. So we need to be working to address that through partnerships like SRMI. Thanks, everybody.
Thank you, Chris. And with this, I'd like to close the session. Thank you so much for joining us today.